eating away at us here. So looking at going into some of the 10-year Treasury notes, this is what I've talked about several weeks ago when I made the call that these 10-year notes would sell off. The dollar would rise, the 10-year notes will go lower. This here suggests that we still have further room. The primary trend on the 10-year note is going to be down. And but it's going to move higher. Why the dollar sells off? If I'm correct and the dollar sells off, the 10-year notes will start to rise back up. So we'll see how this one plays out. But again, this is a determining factor in what's going to happen to the dollar. Now, again, we're looking at some of the currency futures here. The one I want to point out too is the Swiss franc is in a very nice downward move. I've had my clients long U.S. Swiss franc, short or long Euro Swiss franc, also basically selling Swiss francs wherever we can, because finally common sense has prevailed here, and the Swiss franc is off the table as a safe haven currency. And again, I've pointed this out on Trader Planet and to my own clients that there is simply nothing supported the strength in the Swiss franc. They have no position in global trade. They have their bond market is so shallow they could never support the status of a reserve currency, and I've repeatedly stated this. Finally, the Swiss National Bank stepping in, putting a stop to this silliness. So again, I expect further weakness in the Swiss franc, and any strength, short-term strength in the Swiss franc should be used to sell it. Now, coming into our particular currency pairs, the Aussie-US, in my opinion, again, when we look at Forex trading and we look at equity trading and metals trading for that matter, they are all correlated to the Forex market and vice versa. So if the equities are going to rally, then this is warning us, then likely what's going to happen, so will the Aussie-US. Now, it's not necessarily going to be a trend reversal, but what it's going to be is a significant corrective move. We can see the predicted TSI and the predicted MACD are in heavily oversold territory, and they are trying to cross that trigger. Now, in the short term, if nothing else, this is likely to continue higher. When we break this down into our crossovers, you can see our short term has crossed over several days ago. We've moved from the 95 level up to where we've closed in this 97.81, a significant move. Our medium term is not crossed over. This is clearly a warning sign to be a little cautious here. Now again, if the equities sell off, Aussie-US sells off. That's just basically how this works. The other fundamental, of course, too, is that will the Royal Bank of Australia continue to cut rates? Well, probably. So that's going to keep pressure on the Aussie dollar, but it's not a one-way trade where you're simply going to sell this thing. I could see a significant corrective move back towards parity, maybe even a little higher, maybe 101, 102. I think that that's a realistic level on this particular pair before the next big sell-off comes into play. The New Zealand will be, I'll get to that in a moment, but it's basically going to be exactly the same thing. The Euro Swiss franc moving up into my analysis as a major pair, not a cross pair in my opinion. You can see we continue to hold this level. I've talked about a target of 125. We are very, very close to this target at 124.14. We've hit a high of 124.23. Any move back towards the vantage point key levels, 121.57, 122.82, and more importantly 123.64, I think is a reasonable entry point for the beginning of the week. So, and again, we're looking for a minimum target here of 125. Swiss National Bank, if they raise the key peg from 120 to 125, our next target will then be 130. So, and I think that's a realistic outcome to this situation, that once the market gets into their head that the Swiss National Bank is not going to allow any further appreciation of the franc, then it pretty much gives us the green light to sell it. And we all know these currencies can go in very, very long trends, and that's the beauty of the Forex market. Now, the pound dollar, looking at the pound dollar start of the week, again, warning us of US dollar weakness here. The predicted MACD and the predicted TSI crossing the trigger to the upside in heavily oversold territory. Predicted short-term difference already crossing the zero line. Predicted medium and long-term difference also pointing up. Again, if we break this down into the short term, we can see that this short-term crossover has just crossed that trigger. So some potential opportunity here, buying the British pound. But again, this is a very risky trade, considering some of the things that the Bank of England is doing and saying. So a little caution there. Even if the dollar does depreciate a bit, that doesn't necessarily mean that the pound will appreciate. There might be better places to buy or to sell US dollars, excuse me. So we'll be watching this one, but again, I could see a corrective move starting on this one, potentially back towards the 158, 160 level. That's a possibility. So we'll see how it plays out. But again, very important to be taking profits on this. Now, going into our Euro US, this is a big one here. We can see that I've talked last week that when the market was aggressively selling the Euro US, I basically warned of a corrective move back towards the 135, 136 level. End of week, we've actually hit that. You can see on Friday we've hit 135.24. So now is the euro getting ready for another big sell-off? I think it will at the beginning of the week, and it'll very quickly reverse higher. That is what I see as a very, very strong possibility. Again, predicted short, medium, and long-term differences, very mixed there. Predicted MACD and predicted TSI, heavily oversold, guys, warning us again of dollar weakness. So I'm not with my own clients. I advise them I'm very blunt. You know, the Euro US, in my opinion, is not the best trade out there. It's heavily manipulated right now. It's any little bit of noise, it's acting and overreacting, and so it can make it very, very difficult to trade.